So we're going to do an example. This is the S&P 500 index. This is the sister for Nasdaq 100 index. So this is the line graph for the S&P 500, and the line graph shows the simple. It shows the structure, just like we represented it. Hanik smaller, the lecture. Gives that line tool to make a line graph representing break of structure, fake outs, and trend. So this will be a clear way of viewing structure, and this is the most advanced way of viewing structure because it's candlestick patterns. It's all about open high, low close. And this is the line tool the blue line tool that I used to represent the structure of the market. And this is when I squeezed the chart so that you can squeeze it further. Okay, I took the blue line chart that I plotted in the real time, in the real market structure, and placed it here so that I can show you guys the break of structure and fake outs that I can see from this structure low. This here is a break of structure. This here is a break of structure. This here is a break of structure. Why did I label those things as break of structure? Oh, let's start from here. From here to there, we can see that the market was in a bullish market structure. From here to there, it was in a bearish market structure. Hence, the moment when it broke this higher low by this leg, it showed an interest for the market to go to the downside. And what did it do? It did. And how did it do that? It made a lower high relative to this lower high. And from this low to there, that is a bullish market structure. And it turned bullish the moment when it broke this structure, this structural swing here, this lower high here. The moment it broke that structure, it went down to make a higher low to continue to make a higher high. That being a confirmation that the market, really the market wants to be bullish. So it continued breaking structure to the upside. And the moment when it broke this higher low, it showed an interest for the market to go bearish. And it confirmed that by doing what? By making a higher high. I think by making a lower high, broke down to make a what? A lower low. Hence, this price leg going up, maybe it's just a price leg that's going to make a lower high to break down to make a lower low. Sorry. So these are the fake outs that I showed. This here is the immediate realizable fake out that we can see, because here you might not even think it is a fake out. Why? Because from this low to that high, the market was bullish, and the moment when it broke this lower low and this higher low, it ended up going what? Turning bearish, I think turning bullish. So it was a fake out in the higher time frame, but at this structural thing that I'm using right now here, structural representation of market structure that I'm using here, it showed that it was a break of structure, but I just labeled it as a fake out, but it's a break of structure. Hence, and also this is a fake out because it didn't continue to go down to break this lower low, hence, but the reverse. Okay, this is the blue line uh, graph that I used to plot the market structure. I placed it back into the original price action structure to show you the fake outs that I saw. So here's a fake out that I told you about here. This one. This is the fake out I was talking about. Why is it a fake out? It broke to go to the upper side. So when you get into the weekly time frame, what are you going to realize? This is a fake out, because the moment when it broke to make a lower low, it didn't go to make a lower high and rebroke to make a lower low. But what did it do? It made a higher high here and went down to make a lower, I think a higher low to make another higher high. Now there being a confirmation that the market now is in a bullish market structure. And the moment when it broke here, just like we can see, it broke and make a lower low, went up to make a lower high, went down to make a lower low, and that being a confirmation looking at the market is bearish. I don't know, the market might even go to to make a lower high and then make a lower low, or it might go up to make a higher high, and that higher high might be a fake out or a shift of market structure. For it to be for us to confirm that it's a shift of market structure, we need to see it go down to make a what? A higher low, to re-break up to make what? A new higher, another higher high. Hence, that will be a confirmation. We are really bullish, but it might do one of the two. It might go down. It might make a lower high, go down to make a lower low, or just break up, just to continue making to make a new bullish market structure. Yeah, so this is the blue line graph. It is the real price action or real market structure. No, it's the real market structure of the S&P 500 index. And the red line tool or line whatever, line object is the line is what I used to represent the basic market structure of the S&P 500 in the daily. As you can see, the blue line graph, it has intermediate or internal structures that are happening in between these structural swings. No, I think structural legs. Sorry, in between those structural swings, within those structural legs. In between the structural swings, within those structural legs. As you can see, from this low to this high, we had multiple breaks of structure and multiple fake outs happening. The moment when it went up there, it made a fake out here to go down. It made a higher high to go make a lower low, higher low, I think to make a lower low, lower high, lower low, lower high, lower low, lower high, higher high, broke up, bullish, higher low, higher high, higher low, lower high, lower low, lower high, lower low, lower high, lower low, fake out, continuation, fake out, because it broke there, continuation, fake out, because it broke the continuation to the upside to make another fake out. Go. You never know. Shit's happening in the markets. Yeah, we have fake outs and break of structures. As you can see, fake outs are just, engineered. I just used to engineer liquidity, to continue with direction. Those areas are areas of, accumulations, reaccumulation, distributions, and redistributions. We'll talk about those in the future videos. So yeah, that's for today. So yeah, this is the S&P 500. They compare with the the line chart, the line tool that I used to to graph the basic structure, market structure. Yeah, the S&P 500. So I put them side to side and label the break of structures here, and break of structures and fake outs here. So you can take this and use it as your homework. Put there. Label these things for yourself. Yeah, this is a fake out, this is a break of structure, fake out, break of structure, the break of structure, fake out, break of structure, break of structure, break of structure, break of structure to the downside, break of structure. This is a shift of market structure. In between was breaks of structures and fake outs, breaks of structures, fake out, break of structure, fake out, break of structure. Hey, things is happening. So this line and this line below, also this line and these lines, are levels of liquidity. We're going to talk about liquidity in the next video, but these levels is where we are anticipating, is where a trader would be anticipating where the market might go at these levels, and these levels are where the algorithm will reprice to, or will head to, or will go to. These are the levels that the market will go to. These price levels go to this swing low and this swing high, and in between, in the internal structure, we have this swing high and this swing low. So the market might go at that high or at that low, and in between that, it's a range. In between this high and this low, it's a range. In between that high and this low, it's a range. And in between a range, a lot of shit has been happening. So yeah, we'll talk about liquidity and whatever, and why the algorithm reprices to liquidity and inefficiencies, which I'll talk about in the next videos. Rate my videos. You can put on the comments in the comment section what you need me to do, where do you need me for me to improve, where should I improve, and all those things. I want do all those things. Comment, tell me what I should do next, what you wish me to do. I'll figure out if I could do it. Sure. Bye. And money management, risk management, trade management, good strategy, a good psychology, and experience is the holy grail to this market. I don't give a fuck whether you're using SMC or whatever strategy, but when you have those 6 things, you're going to be successful in the market. And when you have a good mentor, you're going to be successful in the market. And I am a good mentor. Why? Because, my brother, I lose in this market. Oh yeah, I have an 80% to 80% somewhere there accuracy. But I also have strategies that can go to about 50. And one of those strategies I'm going to teach you them, and it's 50. And that strategy you can, with experience, with trade management, risk management, fixing all those 6 things that I gave you. Those things are the template to success. Those are the template to success, really. So if you can work with those things, you're going to be successful. No matter the strategy, no matter the win rate. If you have a high win rate, risk to reward doesn't matter. But if you have a low win rate, risk to reward ratios matter. And I'll talk more about these things in the future. I'll talk more about those things. Yeah. Thank you for watching. This is the machine of all trades, master of none. Yeah, whatever. Bye bye.